and that this stuff is likely over time, as the wealth in this space, I think it goes from $3 trillion to $100 trillion over the next 8 years. That'll be the largest accumulation of wealth in history. And wealth always flows upstream, and art is the top of the pile. Even if you go to an art collecting billionaire, they might have 5 houses. After that's hard to manage.
The most potent but unseen driver in today's markets is not a headline, a geopolitical upset, or even a quarterly earnings report. Every asset class on Earth is impacted by the constant erosion of buying power and the unrelenting devaluation of currency. Ignoring this fundamental pattern frequently leads investors to confuse short-term volatility with long-term risk. However, those who support it are aware that the only way to maintain and increase wealth is to outpace debasement. The cryptocurrency market has demonstrated over the past week why it is still one of the few markets that can generate those returns. As altcoins gain traction, Bitcoin's hegemony has been called into question. High beta assets see a flow of liquidity, and the entire cryptocurrency ecosystem shows resistance to major setbacks. Raoul Pal, the creator of Real Vision and the brains behind the Everything Code concept, is a former hedge fund manager and one of the most outspoken and reliable commentators on this subject. Pal's research combines network adoption, liquidity, cycles, and monetary policy into a unified framework to explain why some assets perform better over extended periods of time. His thesis is based on the idea that the only way to manage the world's debt load is to devalue currencies, and that technology, stocks, and cryptocurrencies are the assets best suited to this reality. This is not an abstract theory in Pal's opinion. This model, which is supported by data dating back to 2008, demonstrates that liquidity and devaluation patterns account for 90% of the price movement of cryptocurrencies and almost all of the performance of the Nasdaq. Pal's point is that investors have a clear blueprint. Keep assets that, over time, consistently outperform the rate of depreciation. Only 2 categories, in Pal's opinion, actually accomplish this: cryptocurrency and technology stocks. The S&P 500 just equals the depreciation rate. Gold performs poorly, and everything else performs poorly. In the cryptocurrency space, the assets with the highest adoption rates, liquidity, and strong network effects typically emerge victorious. He contends that the only macro aspect that truly matters is comprehending the connection between macro liquidity and asset performance. We will now examine his most recent analysis to see how this thesis is developing in real time. Ranging from the present state of the Bitcoin market to the altcoins exhibiting the most robust adoption patterns to the emergence of extremely rare digital assets. You'll learn why Pal thinks that disregarding these signs could be the most expensive mistake you make in your investing career by the end of this video. To ensure you don't miss our in-depth market coverage, please like and subscribe if you're new here. Thank you, and have fun with the video.
But in those houses, they have 10 times the value of the house in art itself. Right, so it has always been a proven store of value. And so what we're seeing is, as ETH goes higher, the prices don't adjust down, which is what people thought happens. What actually happens is wealth creates demand for this stuff. So this stuff is ripping. And, I think the stuff that I started buying in 2024, early 2024, is up between 3 and 5x in ETH terms. And then ETH is up another, whatever X, depending where you bought the NFT. So they become this massive multiplier trade. And I'm going to show you a chart on this because I put it on X yesterday. Let's have a look. And people were like NFTs because everyone got burnt in stupid shit NFTs last time. But really, there was signal in all of that. That was my point. Signal was there's some real stuff that's going to have staying power that didn't lose a lot of value. And the moment people started realizing, if I think about when I bought Giga Chad, the Beeple, I think I paid like 9 or 10 ETH for it. And now they're trading at 40 or 50. And ETH has gone up 3x since then. I mean, Christ. I mean, that was a trade. But look, the chart I'm showing now is the chart of punks, which best represents the space in dollars. And now I've actually got a longer term version somewhere. Actually, I've got it here. In fact, I'm going to show. We built a whole model around it. It was in RV Pro Macro as well. A whole model about how to value this stuff, how liquidity drives it, how it fits into the business cycle, the whole macro overlay. So here is this chart as you've never seen from anybody. This is the punks chart long term in dollars. I mean, you'd be buying that all day, right? Look at this chart that I'm sharing now. This is punks in ETH. Now, from last year, when was that? August
That is
24, when we had
wild.
that correction that started the banana zone. These things have outperformed 3 to 4x ETH. And ETH was down
Wow.
at, and ETH is 3x from there. So it has been the trade, really, of the cycle. It might have even outperformed SUI and stuff now. I'm not even sure. But, you know, people were saying, well, do punks and Bitcoin trade 1-for-1? But punks are so scarce, really. And considering a bunch of these are locked up in DAOs and, you know, Yuga have a bunch, Mickey Malka has a bunch, there's very few to be able to buy. And if you want them, it's available and good. You're going to pay up for it. It does look really undervalued, by the way, for 666 by the most iconic artist in the history of Web3. And they're like, I saw the number yesterday. I think it's 78% of them are owned by different people. I think it's the broadest distribution of any. Well, I mean, people keep asking me how do I approach it? And that's actually a harder question, you know. And obviously, if you've got a lot of money, buy a punk. If you're somewhere in the middle, buy a grifter. And if you don't have that much, buy a dick butt. And then there's a whole bunch of others. There's as we've talked about, the rec guy, the MFers. There's a bunch of these kind of larger collections before you start getting into the art stuff, which is a bit more difficult. But I think people just need some exposure to this, because if wealth gets recycled and ETH goes to all-time highs, this stuff is going to all outperform. For me, it's the art thing that I'm more focused on than anything. And the reason being is, as Punk 6529 talks about, and I've written about, these are the apex of all tokens. They're the scarcest, most valuable tokens that will ever exist. People don't understand this yet. This is Fifth Avenue, Central Park real estate. This is Mayfair. You know, this is unbuyable stuff. In a world where these economies become vibrant, this is apex tokens, block space, the apex of all.
The everything code structure is the direct foundation of Pal's view for this cycle. He predicts that the dominance of Bitcoin will eventually give way to significant rotations into Ethereum, widely used layer 1 chains like Solana and SUI, and even more affordable, more speculative tokens that draw interest from the general public. This market noise isn't random. For decades, he has observed the same risk curve unfolding in traditional markets, where liquidity first moves to safer assets before shifting to riskier higher beta trades. He refers to the idiot-proof trade in cryptocurrency as buying huge layer coins that have been proven to be popular, whereas the more aggressive strategy is focusing on the top 10 cheapest coins when retail inflows spike. These trends recur because they are rooted in both the liquidity cycle and human behavior. But the everything code isn't just about coins, as Pal's most recent tweet makes clear. It also holds true for extremely rare NFTs and digital art. Following a significant period of consolidation, the prices of digital art and cryptunks have been climbing dramatically. He wrote, "Punks have increased by 100% since we initially suggested them in GMI, and they have also greatly outperformed ETH. Even when ETH was at its peak, you don't have enough of the extremely rare Apex tokens." This viewpoint prepares the reader for the second part of his research, in which he explains why some NFTs are acting like expensive fine art, gaining value in both fiat and crypto, and why they might rank among the most valuable digital assets of the upcoming 10 years.
Don't like these as a trading vehicle. You can trade some of this stuff. It's liquid enough, these larger collections, to just about do stuff. But really, this is just by acquiring and holding the most scarce block space of all. That's the game. And it's not, you know, for the next 6 months or, 12 months. That game, I think, is too hard. Because, good luck, as you said, trying to get rid of, 5 one-of-ones by X copy in a bear market. I mean, there's no way, because nobody's got the money to pay for it. Yeah, I do. I've said this for a long time. I mean, as you know, my main bet has been SUI for a while, and before that was Solana. Those rotations have done well. SUI still generally outperforming Solana over a longer term basis. I think the next phase of Bitcoin dominance, we're seeing the ETH rotation trade. That's good. The catch up is happening. Okay, once it gets into kind of mid value versus Bitcoin again, then I think we'll see the rest of the space utterly ignite. And as we know, once you throw in a lot of liquidity into lower free float things, they go up more. And that's how it always plays out. And that's where we are in the cycle. Now, one of the things on the macro side that we look at is the influence of the business cycle on that particular trade. And it's the same trade you and I have grown up with in markets is earnings have to go up for people to go further out the risk curve. So when the ISM picks up properly, the business cycle picks up, corporates and people earn more. And what we find is, in the bond market, it goes out to junk, then out to emerging market junk, and then out to private credit. We see small caps outperforming big caps in equity markets. We see all of this, and it's the same with the altcoins. The issue is everybody thinks their altcoin should go up. That's the issue. Is it's like everyone's like, well, mine hasn't gone up, so therefore this is all wrong. It's like you need to have the right altcoins, and I think people mid-curve it. They get so involved in the value benefits of their particular token when really there's one simple thing is go onto CoinGecko or CoinMarketCap and look at crypto. And we've talked about this. It's like, I'm sorry, but people are going to buy XRP and Doge and Cardano, whether you like it or not, because they're cheap. In the absolute term of how much you pay for a token, so people will do that. The alt layer ones that are getting absolute network adoption, Solana, Sui, few others, great. And then somewhere in the middle, we'll see what happens. But I think the middle part is the harder play. Hey, I've got this DeFi token that could be amazing. That's pretty hard. There's some idiot-proof ones, which is big layer ones that get adoption, go up a lot, and they're less risky. And the moron trade, which is always a good one, which is just buy the cheapest thing on the top 10.
Like
that. Look at this. In fact, I'm going to show you the moron trade now. And I'm not saying that these are moronic and people are moronic for owning them. I'm talking about when retail come in, what do they look at? Hold on. What do I get? Okay, I'm just going to share this. Okay, so you're new to crypto. Welcome to crypto. Oh my God, Bitcoin, I can't buy that. It's $116,000. I can barely afford lunch. Ethereum, well, that's pretty expensive. Oh, but XRP, I've heard about that. I saw some videos on YouTube. It's $3. BNB, well, I don't really know what that one is. Solana, $175. Oh, but Doge, Elon likes Doge. It's 22 cents. And Cardano, I've seen tons of videos. It's 78 cents. You can see what happens because we've all done it too. So that's my general thesis, that the anchoring bias of price is a real thing, and look at the top 10 because you think you've de-risked it. Yeah, so when you speak to friends now, some people got bored in crypto over that period of sideways consolidation. They're all punting options on tech stocks, right? So the speculative fervor and the confidence that I can make money in this because everything's trending because of the debasement and everything else, and we've got some mega narratives like AI, makes it pretty easy game to make money in. And you're starting to see it sucking more and more people in. Very interesting is, I've had this everything code thesis for quite a while now, but generally speaking, the crypto space has understood debasement of currency versus inflation, which is what TradFi thought of. And we've been on this trade saying they need to refinance the debt. That's the whole everything code thesis. And here is Scott Bessent coming out saying publicly, we need stablecoins to refi the debt. Trump saying we need the Fed to cut rates because we need to refi the debt. The whole game is now open. They're telling you what the game is. And there's still a lot of TradFi people who don't want to understand it because debasement's not a thing that was taught at university. So very simply, what beats the debasement? Debasement's about 8% plus a bit of inflation, whatever. So call it 10, 11%, 12%. Well, the S&P does that. So that doesn't help. Gold does a little bit less, so that doesn't help. So you've only got actually two assets in the world that outperform the debasement of currency. One is technology stocks and one is crypto. When you divide the NASDAQ by Bitcoin, it's down 99.997%. So it's like, okay. Then when you put the correlations of the long-term drivers of the asset prices, 97.5% of the NASDAQ is explained by debasement, liquidity, and 90% of crypto. So you've got the largest dominant factor in the history of macro markets over the longest persistent period of time since 2008. So you basically only need to care about one thing, that. And the other side is how fast is it being adopted, which is why it outperforms the debasement. So in which case you've got only one macro factor that matters, which is why I keep saying to everybody it's all noise. Whatever it is, fucking Israel, China, nobody cares. Nobody cares because it's 90% of all price movement is explained by one factor. And then so just
You must
if
get
that's
really
the case,
bored
just buy
going
one
on these-
asset. Weird to
Everyone-
me, right? I was never that guy. I was like the diversify. We need a bit of this
Of
and
course.
on some emerging market call options, and it's like none of it fucking matters. If it's crypto, then all you need to do is look at what is the strongest performing chart, let's say on a weekly basis, and that happens to be SUI. So I just own that. But you could just own Bitcoin, or you could probably just own ETH, or you could own Solana, and you'll be fine. And then once you own one asset, so you don't have to watch this whole basket of shit. And we've all run portfolios, and before you know it, you've got 10 positions that are losing money because you don't focus on them. So it's like, get rid of all of that noise. Then look what Bitcoiners did. The early adopters did nothing, and they compounded more wealth than anybody else in the shortest period of time, pretty much, apart from a few startup founders. So the signal's there. And then if it is one factor, then all you need to worry about is liquidity. That's it. Is doing this, and those guys are great.
Right.
Yeah, it makes total sense. It makes total sense. It still feels like the market, if I look at the top 20, it still feels like it's not mature enough, really. So you've kind of got some weird stuff in there. But generally speaking, should work fine. The issue is Bitcoin's a bit too large percentage. No, I'd probably take top 10. I think that's fine for now.
Keep some Doge.
You got the issue. Yeah, you got the issue of Bitcoin being a bit large. Like MSCI World used to have this massive weighting of Japan, and everyone had to produce an ex-Japan version of it. So do you have an ex-Bitcoin version? So you can buy Bitcoin via an ETF and then have everything else ex-Bitcoin?
Pal views NFTs as the pinnacle of the blockchain era. Similar to Web3's Fifth Avenue and Central Park real estate, CryptoPunks, unique digital art collections, and other high-scarcity commodities. He contends that their great scarcity, cultural significance, and position at the top of the money flow pyramid are what give them worth. Similar to how traditional billionaires invest in great art after their other asset needs are met. Pal thinks that the anticipated growth in cryptocurrency wealth over the next 8 years from $3 trillion to $100 trillion will create an unparalleled demand for these tokens. Early data from the NFT market is beginning to support historical trends in art markets that indicate status and scarcity work together to produce price resilience. He cites the fact that some collections have withstood the most severe periods of the cycle, had devoted followings, and are currently outperforming the leading cryptocurrencies in terms of returns. The price of these NFTs does not decrease when ETH climbs. They provide holders with a significant multiplier impact by holding or even appreciating in ETH terms, with the added bonus of blockchain-driven liquidity and worldwide market access. This resiliency reflects the actions of blue-chip artists during fiat currency expansions. He claims that all of this contributes to the ongoing banana zone, which is the stage of the cycle where adoption, liquidity, and risk appetite come together to produce exponential returns, as well as the everything code. Pal enumerated the benefits in a tweet nearly precisely 1 year after GMI and Real Vision Pro announced the beginning of this phase in August 2024. Bitcoin is up 140%. Ethereum is up 105%. Deutsche is up 210%. SUI is up 650%. And Solana is up 51%. He was direct in his message to those who were still curious about Banana. You already know the solution if you were holding the top tokens. SUI was the finest choice and always will be. He came to a conclusion. You're welcome. It all comes down to the code for everything. I appreciate your consideration of this issue and wish you luck as you go on your future. Pal's confidence stems from years of data showing the same liquidity-driven results, cycle after cycle, not from conjecture. The message remains the same whether you are interested in Apex NFTs, high adoption altcoins, or large-size crypto. Don't stand against the code. Align yourself with it. Please remember to like this video, subscribe for more in-depth market coverage, and leave a comment below if you think this breakdown was helpful. Which assets, in your opinion, will dominate the upcoming Banana Zone leg? We appreciate your time and hope to see you at the next one.